Well, it's official. For the first time since late June this year, housing inventory, or the number of houses for sale nationwide, is up compared to 1 year ago. I'm going to share why this is happening, but also going to share what's happening right now regarding home prices, housing inventory, new listings, and also the share of price reductions as well. This is based on my own analysis of Realtor.com's latest data. So here's the actual report from Realtor.com, just posted last Thursday. And just like my previous videos, I did not even read it. Instead, go to Realtor.com/research/data. I also provide a link in the video description below here, but click on this link right here. It more or less takes you to this information. So let's first talk about asking prices nationwide. This is for the week ended November 11th this year. So asking prices have increased by 0.7% compared to the same week of 2022. Prices have been relatively flat or up very, very slightly, up by about 1% or less every week since late July this year. We're not seeing a sharp pullback in prices this year due to limited inventory levels of existing houses and because prices were falling at a much faster pace last year compared to this year. Okay, let's now talk about housing inventory, which is active listings, the total number of houses for sale of existing houses here. That was a gain of 0.6% compared to just 12 months ago. That was the first increase in the last 21 weeks. Inventory is up year over year, in my personal opinion, due to two main reasons. Number one, inventory grew much faster last year compared to this year. And I'll share some trends regarding that here in a little bit. And housing demand is down. So as fewer home sales occur, this actually causes inventory to actually increase. Something I have to mention again, though, I don't want you guys to get the wrong picture here because there's probably a lot of misinformation out there regarding why inventory is now up. It's not due to a giant surge of new listings. In fact, new listings are still down or are still down compared to previous levels here. And on top of that, we are seeing a seasonal decrease of new listings as well, but new listings are not falling as fast as last year's levels. Now, speaking of that, here's a look at new listings according to Redfin. Let me just zoom in here. So this is on their data center website, which is redfin.com/news/data center. And again, I provide links to all my sources in my videos in the video description below here. So new listings right now, according to Redfin, for the 4 weeks ended November 12th, is up by 3.3%. But as you guys can see here, we're not seeing new listings shooting up. In fact, new listings have been falling ever since the late spring months. So even though we're up on a year-over-year basis, this does not mean that new listings are increasing. What this means is, let me just exclude 2020 and 2021. So in 2022, which is this black line right here, new listings fell big time as rates absolutely surged. Whereas this year, we are seeing a decrease, but not decreasing at the same levels last year. That's one of the main reasons why we're up by 3.3%. Let's also discuss the latest numbers from altosresearch.com as well regarding inventory levels, because that is virtually flat on a year-over-year basis. Only a gain of 327 more houses for sale right now compared to 12 months ago. So we're very, very close to being in positive territory, according to them, even though Realtor.com just reported last week that inventory levels are up slightly here. So I would imagine that Altos will report a gain of inventory levels compared to the previous year here very, very soon. So something that you guys should be aware of as well is what happened last year compared to this year. So this year, we're seeing 98,000 more homes for sale compared to the start this year. So year to date, up by 21%. That's a gain of 98,000 more houses for sale year to date. What happened last year though? Inventory levels absolutely skyrocketed, right? So compared to the first week of 2022, there was a gain of 278,000 more homes for sale compared to this time last year. So year to date at this time last year was up by 278,000 compared to only 98,000 this year, a gain of 21%, whereas last year it surged by 95%. So inventory has been increasing very slowly though this year, according to data from Altos, but supply is still rising due to home buying demand decreasing. So normally supply decreases during this time of year. So again, highly unusual that we're in mid-November and inventory levels have not peaked thus far. Also, something to keep in mind though is that even though inventory levels are slowly increasing right now, we're still down by about 35% compared to the same week of 2019. Now here's a look at inventory levels, exactly what I shared here. Year to date, which is the beginning right here, we started at 472,000 houses for sale. Now we're at about 570,000, a gain of about 20%. Whereas last year it surged. We were at, what was this at? 292,000 for the first week of 2022. Then it surged to nearly 570,000 by the time we hit mid-November. That was a giant increase of 95% compared to the only 20% gain we're seeing this year. So big picture here, when looking at levels last year, inventory levels is virtually flat, but at about 570,000 right now, still much higher compared to 2021. Also a little bit higher compared to 2020, but about 35% less than this time in 2019. Also less than 2018 as well, when at that time there was around 913,000 houses for sale. Now there's about 570,000. Now here's something that will also probably cause some confusion as well. So Realtor.com has reported that new listings, this is a measure of the amount of people listing their house for sale, increased by 6.4% on a year-over-year basis. So new listings are up compared to last year's levels now for 3 consecutive weeks. Again, though, new listings are up on a year-over-year basis due to the fact that new listings were falling much faster at this time last year. Something else worth mentioning as well is that new listings before these previous 3 weeks here were down on a year-over-year basis for 68 consecutive weeks. So new listings were falling on a year-over-year basis for more than 1 year. So this is a very big change though, because for the previous 3 weeks, we're actually up year over year. Okay, let's change gears slightly here and talk about the changes of days on the market. The time frame when a home seller lists their home for sale until they accept an offer from a home buyer. That's days in the market. Again, though, this is a lagging indicator because this is a measure of that time period based on a closed home sale. So in any case, last week it took 2 days faster to sell a house compared to the previous year. So houses are selling faster for the past 6 weeks in a row. Before that, they took longer to sell for 58 consecutive weeks. Okay, let's now talk about the number of price reductions nationwide, because for 24 consecutive weeks, we've been seeing decreases in the number of price reductions nationwide. This is compared to the triple-digit gains we had to start the year. And last week, it decreased by 8.3% compared to the same week of 2022. Now, I have some theories regarding why is the number of price drops decreasing here. In my personal opinion, it has been negative ever since June due to 2 main reasons. Number 1, limited amount of houses for sale nationwide, which of course means we have fewer options of houses to buy, and therefore that's leading to fewer price reductions from home sellers because they don't have a lot of competition for their houses being listed for sale. And number 2, price drops surged last year. In contrast, the share of price drops is relatively flat this year. So here's exactly what I mean by this, because here's a chart going back to 2018. So the share of price drops right now is at 39.18%. This is actually the first decrease we've seen in quite some time. A very small one, a decrease of what, 0.01%, but it appears that potentially the share of price drops may have peaked this year. But at 39% right now, a little bit lower compared to last year this time at 43%, but at 39%, still much higher compared to 2021 as well as 2020. It also is higher though compared to 2019 though at 36%, and also higher compared to 2018 at also about 36% as well. All right, I know that was a lot of information to share in today's video. So here's a summary for you guys. Of course, if you guys are still watching today's video, I appreciate you. Please hit the like button. Number one, asking prices have been relatively flat or up very, very slightly year over year every week ever since late July this year. Home prices, and when I say that, I'm talking about the median asking price, haven't been dropping from a year ago very much due to limited inventory and because prices were falling at a much faster pace last year. Number two, housing inventory increased by 0.6% year over year, according to Realtor.com. That was the first increase in the last 21 weeks. Inventory still has been increasing very slowly this year. We're up by about 98,000 more homes for sale compared to the start this year. That's an increase of 21% year to date. Compared to the surge we experienced last year, a giant increase of 278,000 more homes for sale year to date at this time last year. That was a gain of 95%. Also, new listings remain at low levels, even though they're up compared to 12 months ago. The low amount of new listings is causing inventory to stay at historically low levels. Down by about 35% compared to the same week of 2019. Also, something I did not mention in today's video, and let's just kind of talk about it very quickly here. The average 30-year fixed mortgage rate has remained elevated, but has decreased by about 60 basis points compared to about 1 month ago. Also, the share of price reductions is high or higher right now versus the same week of 2018 and 2019, but lower than 12 months ago. So 12 months ago, the share of price drops was at 43%. Now it's at 39%. Number five, houses are selling faster right now for the past 6 weeks. Again, this is on a national level. Every housing market's different. So for comparison's sake, they took longer to sell for the previous 58 consecutive weeks. That was August 2022 through August this year. Of course, that's a lagging indicator of what our housing market was like, 1 or 2 months ago. What are some potential huge changes ahead? And of course, a disclaimer, I am not a real estate market fortune teller. Number one, average rates or average 30-year fixed rates are about 0.7 percentage points or about 70 basis points higher compared to 12 months ago. That's approximately a 7% decrease in buyers' purchasing power. Also, there's a lot of challenges that home buyers are facing right now. We have record low housing affordability, very low inventory levels of existing houses, elevated prices and rates, and of course, a lot of uncertainty. Number two, housing affordability is a huge hurdle for home buyers, especially compared to the past several years. So rates have more than doubled, and of course, prices are up by about 27% from September of 2020. That's based on my own analysis of NAR's data. Also, rates remain very much elevated, and on a national level, home sold prices have increased by about 6% year to date, based on data from Redfin. In my opinion, we can't have high home prices, high rates, and expect home prices to go up forever. In my personal opinion, we have seasonality ahead of us here. And of course, all these affordability constraints, which should, keyword should, put downward pressure on prices for the remainder of the year, which my personal opinion is very much needed if we want to have a more affordable housing market, which would be healthy, by the way. Number three, early signs of home buying demand, of course, have been all over the place due to all the volatility in our housing market and also due to the volatility in rates as well. The most recent stats we have that show that applications for home loans, these are applications for people looking to buy a house using a loan decreased by 12% year over year last week, according to the most recent data we have from the MBA. And based on the MBA's purchase index, that's roughly on par with the lowest levels since approximately 1995. Therefore, home buying demand is still very, very low. Also, the National Association of Realtors reported that pending home sales in September for existing houses decreased by 11% compared to September 2022 to the third lowest reading on record. Can you say a huge decrease in home buying demand? In stark contrast though, new home construction sales, and that's defined by the US Census Bureau as a contract signed or a purchase contract signed between a home buyer and a home builder, or a deposit taken. So for that same time frame, new construction sales increased a whopping 34% compared to a decrease of 11% of existing houses for sale. So it appears our housing market is highly rate dependent. And of course, the data coming in is ever changing. And of course, real estate, of course, is very much local. What I'm sharing in today's video is on a national level. And of course, it may vary compared to what you're seeing in your neck of the woods. Number 4, home sellers and buyers have exited this housing market, leading to a dip of new listings and pending home sales. The lack of new supply of existing houses since last summer has led to inventory remaining at historically low levels. If homeowners continue to decide that now is not a good time to sell our houses, that of course will limit housing inventory. The direction of our US housing market will likely depend on unemployment, mortgage rates, inventory, and of course the balance between supply and demand. That's basically economics 101. And number 5, I appreciate you guys so much for watching today's video. Of course, for supporting my YouTube channel. If you guys are still watching today's video, then please like, and also if you haven't subscribed just yet, I invite you to do so because I post frequent housing market updates so you guys can be more informed. And with that said, I appreciate you guys again, and we'll see you in the next video. Have an awesome day.